anytime that balance is lower, your interest cost is lower. And so over time, velocity,
to have immediate access to capital with no permissions, right? Like you don't have to ask any permission. You can just call.
Welcome to Montana Whiskey, Wealth and Freedom.
Well, I've been in love, I've been on the ground, I've gotten back on my feet, just fall back down on my knees for you and your whiskey under the bridge.
Welcome to the Whiskey, Wealth and Freedom Show. The topic of this show is strategic redundancy, and the title of this episode is Build Control Before You Need It. So in the previous episode of this three-part series, we've established that most people are operating inside systems they don't control. And this isn't just about money or spirits, which we talked about in the first episode, but about control over your life when it matters most. And I thought about you, Willie, when I put these show notes together, because when I put about control over your life when it matters most, what's the word that comes to mind?
I don't know.
Freedom.
Well, yeah.
Yeah. You were the one that brought it up in a previous show. About, I hear Willie's voice in the back of my head. Freedom.
Yeah.
So, just real quick, no questions on this one. Just quick intros recap. To my left, Karen Goff, certified liability advisor and mortgage professional with CMG Home Loans. Across the table for me is Willie Blazer, founder and CEO of Willie's Distillery, and Adam Wright with Pulse Marketing. And Adam, good to have you on the show today. It's time to now reveal the surprise offer for new community members, which is our new Whiskey, Wealth, and Freedom hats.
Nice. Very nice.
So,
co-branded.
Yeah.
By our very own
with Willie's Distillery,
Willie's Distillery.
with Willie's blessing. Thank you for that, Willie.
Thank you.
So the way this is going to work is we're going to make these hats available for any new community members. So when you join the community, it's a free community to join. When you go into the community, you'll have the ability to actually purchase a hat. The first 100 members that sign up for the community will be able to get the hat at cost. And then anybody after that, then they'll just pay normal price. So I would encourage any of the audience, the first 100 people that want to sign up for the community to do so they can take advantage of discounted pricing on the Whiskey, Wealth, and Freedom hats. So I'm actually going to put one on so I can showcase it. Willie is going to refrain from his hat because he's prettier than I am, so he doesn't need a hat to
You've
hide.
got beautiful hair, too.
Honey, you put yours behind you.
Oh, I did.
When you set up.
Yeah.
I feel like Vanna White there. For
Ask
You
your
did.
question,
I tell you, you did a good job. If the swag thing, needs some, you need other income.
Yeah.
We might be able to find you a. Yeah.
Walk across stages and unveil
What's
things.
cool about Vanna White is she actually owns quite a bit of Wheel of Fortune now.
Oh,
It's a pretty cool
that is neat.
story that she's done, and yeah, it's pretty cool.
All right. And a lot of you maybe have remembered I usually wear a hat in the other shows, which is a Willie's Distillery hat, which is a great hat too, and I love that hat. I intentionally didn't wear that hat today so I can have a free head to wear this one. So anyway, now you can see it in action. So Willie's Distillery, the promoted products of the second quarter of 2026, we've got the Cattle Dog Whiskey, the Green Truck Gin, and the Snowcrest Huckleberry Vodka. I wanted to circle back to the Cattle Dog Whiskey and the Green Truck Gin for this episode because I kind of feel like they are very interesting to me and Karen and with what we do from the standpoint that as Willie, you've been a part of these conversations in the past. Adam, you really haven't had a chance to be privy to this yet, so you're coming in a little bit on the out ropes of this. But with what Karen offers to people, with what we try to do in the New Frontier Financial Advocacy, is the all-in-one loan which is I'll let her talk about that more. And then comparing or bundling that, looping that with the infinite banking concept, which I'm not sure. Are you familiar with that at all?
We touched on it in my first episode, but that would be the start and stop of my
Okay, we can get into it in a little bit more detail.
Please.
But the cool thing about it is when you combine the two, from a strategy standpoint, they represent very different things, very much like the whiskey and the gin, from the standpoint that the gin back in the Prohibition days represented kind of like speed to market. It was fast. It was something that was readily available. And the cool thing about the all-in-one loan is it's something that allows people quick accessibility to equity in their house. And when you partner that with the infinite banking contract, which is really more of a long-term stored value proposition in a high cash value life insurance contract, you've got a nice redundancy bundle of cash flow and capital reserves, and that really helps position people, put them in a really good spot to really be able to excel in the marketplace strategically. Yeah. So I kind of thought it was kind of a cool way to sort of talk about the whiskey and the gin, because when you think about the roles that they played during the Prohibition era, they kind of took on the same roles, right? We talked about in the beginning. The cattle dog, the whiskey, not the cattle dog specifically.
But the Canadian whiskey.
Canadian whiskey was something that still required that aging process, was still stored value, was still in barrels that provided a premium in the marketplace. And then you had the gin, that was something that was a little bit more of a decentralized commodity that a lot of people could access and much quicker.
Right.
So the ability to be able to have both of those things prevalent or available in Prohibition was a good thing during the Prohibition era. So I just thought I wanted to kind of mention that as sort of like my little take on the whiskey and gin combo for this episode. So going into the freedom part of the show in this episode, what does life look like when all of your wealth/cash is inside systems you don't control versus when you actually can implement systems you do control? So I don't know if anybody wants to jump in on that.
Yeah, I mean, obviously it's better if you can control it. I don't know exactly what all that entails, but that doesn't make me a control freak, but I think most people would agree. Like, you want to be able to control, your life and your wealth, versus somebody else doing it, I would think.
Yeah, or having that fear that it could disappear out from underneath you. Like, that's not freedom if you're connected to that fear of that constantly being a threat, even on, even if it's just a tickle, and then yeah, you're not really free from that concern.
Well, and it's interesting.
It's a trust factor too.
Yeah.
Like,
yeah.
If somebody else is managing that, you better trust these people.
Well, and when we were talking in the break, when people start siloing their money, because I'm maxing out my 401k every single week, but I don't actually have the money for my expenses. And so I'm using credit cards at 28%. Like, pull back the picture and think about what you have control of here, because what you have control of is actually how much is going to that investment. And is that the highest and best use of your money if you have this other thing? So, the more you can control finances and control how your money's moving, the better off you are.
And I think the other component to it too is permission. Like, the difference between having your wealth or your cash inside systems you don't control is if you want access to it, you have to ask for permission, right? So you're in a position, you're a business owner, you need access to capital, you need to go to the bank and you need to ask for permission. Can I please have this money, banker, Mr. Banker, sir? I promise. Just as one example. And so I think that, that's kind of a key factor to it, is when you actually can, in a position where you can implement systems you do control, now all of a sudden that whole permission component goes away, and you're in a much more empowered position. So how does something, Karen, like the all-in-one loan change cash flow control? And what does it mean to turn your checking account into an active financial tool? Before you answer that question, please just give a quick high-level 5-minute
overview of what the all-in-one is. So basically,
let's make it 2 minutes.
Basically, it's super simple. I could do it in 30 seconds. It is a checking account married to a mortgage. And because of that, because it's completely married together in the same institution, et cetera, it means that every single time you make a deposit, if you happen to have a balance on your mortgage, it sweeps over the same day you make the deposit and holds down the interest. Interest is factored daily, and so therefore, if any time that balance is lower, your interest cost is lower. And so over time, velocity, it's been called velocity banking, a million other things, much like IBC has. It's a way of getting all of your money working for you in a loop so that you're keeping control over it. You know, house wealth is one of those things that is this massive asset on your balance sheet, but you can't access it other than by using it to borrow against it. And very oftentimes it's inefficient and takes a while and can get expensive. But if you can put something on there that's going to last you for 30 years of financing, you know, and be able to access it when you need to add those redundancies. If you have a paid off mortgage, well, at least have something there that should you need it, you could grab it when you need it, not trying to get it later. Figuring out a way as you're looking at exactly, okay, highest and best use of my dollars right now, is it putting in this account and lowering that? Or do I want to pull equity out of that house because I have this better opportunity here? And really just expanding the possibilities of what your net worth can be doing in all the different ways.
Yeah, it makes sense.
I know you have questions, Adam.
It makes sense, but there are questions.
Well, please ask.
That's a
them.
great way to sum it up.
Do you have any specific questions, Willie, that come to mind?
Like you were saying, tying your checking account to the mortgage. Like, can you explain on that a little bit?
Yeah. So for the most part, basically, the guy who founded my company and created this product, he looked at how ridiculously inefficient the checking account is.
Right.
Money sits there.
Yeah.
And
No.
we might not need it for 6 months to a year, but you can't go invest it necessarily because that's probably tying it up. They want, you can't be pulling it back as soon as you need it.
And you give up ownership of it when you do that.
Possibly, depending on where you're putting it. And you also have this giant albatross that is this mortgage, that if you're trying to, you can affect your percentage rate of your mortgage by paying extra to it. But in a traditional mortgage, if you pay extra to it, you've lost access to it. So you certainly can't put the money in there you need in 6 months to pay your taxes because you're going to need it in 6 months. So why in the world don't we put together a system so that it's saving you money? All of your idle dollars are saving you money every single day you don't need them. But the access is there as easily as writing a check, doing a transfer, using your debit card the second you need it.
But that's because all of your income, all the cash flow that flows into your life from an income standpoint goes straight into the same account.
Into your checking account, which just sweeps over every night.
Or sometimes savings account. Like,
yes. But in this case, like one of the ways that it's super powerful, even a savings account, like people want to have that savings account to be safe, right? Of course.
Right.
If it's sitting in my savings account, though, and I am only making, even a savings account, maybe 4%, maybe 5%.
Yeah, at the most.
Yeah,
right.
That's high.
But what are you paying on your mortgage? So like one of the most interesting ways to show people is, okay, fine, you have this money sitting in savings, 30,000, 20,000, 50,000, whatever. If you could sweep it over into your mortgage where it's as easily accessible as it is sitting in your savings account, because there's a checking account tied to it, it's holding down. Now you're really holding down that principal balance and therefore holding down the accrued interest in a way that it's there for you as when you need it. So it can become a very powerful tool. Like for the most part, people, I just have done 2 this month that both of them are going to pay off their mortgage in 8 years and save hundreds of thousands of dollars in interest, but they won't lose access to the money because they still, when they need it, and I love to have people spell it out worst case scenario. One of you loses a job. What does this look like? What's your cash flow looking like now? One of you, you end up wanting to buy something else, right? Because it is all your money's going in there. You still want to invest. How much do you usually invest? Or how much would you love to invest on a quarterly basis? Okay, fine. Let's show pulling that out every quarter. And because you're actually making your mortgage way more efficient, you actually have that much more you can end up investing because your idle dollars are actually working for you every single day that you don't need them.
Sounds awesome.
Yeah.
Well, I mean, smart people have been making money off of dumb people for thousands of years. And, resourceful people have been making money off of lazy people for thousands of years too.
Hey, I have a question. Sorry to interrupt you, Willie. I never thought to ask this question before, but if you have a mortgage contract or mortgage loan that's an all-in-one, and you take money from your all-in-one loan from your account, and you use it for a business expense, can the business pay back the loan as a tax write-off?
Yeah, I mean that in that way it would be the same as infinite banking concept, right? If you're charging your business though over that amount, you have to claim it as income, not a tax, not a CPA. So don't take this as tax advice. But there's a lot of like anybody who has an infinite banking concept too, or any kind of investment you have. If you're going to pull your own money and loan it to your business can write off the expense. But then if it's paying you back personally more than it's costing you, it kind of depends on how your business is structured and all of that.
But it can work with that way
Sure.
with the all-in-one, where if your mortgage,
if it makes sense to
your
loan
mortgage,
your business money and your business is paying back the interest.
Yeah, if your mortgage is if you're paying 5% on your mortgage and you put money into your business out of your all-in-one loan,
right,
and the business pays the all-in-one loan back, you at 7%. You can write off the 2%, the difference, because you're still having to pay 5% on the loan.
Well, the business is going to count the entire 7% they're paying as an expense. You have to claim the difference as income. So yeah, I mean, all that just begins anytime but a lot of the time with all-in-one, where it's fun for business owners, you have money in your business account sitting idle.
Yeah.
So there's every month, how much you're going to have, and
Right.
for your this only works really with somebody who actually owns their own business, not like a C corp or something like that, but an S corp, something like that, Schedule C. That money that's sitting there in my business account doing nothing, and I don't need it this month, but it needs to stay in my account. It's business money, right? I mean, I'm a good business person. Well, if you could sweep it over after your statement cuts, it's holding down your loan balance all that time. Before this next statement cuts, sweep it back. So you don't have to do a bunch of journal entries because ultimately your business bank statements are always perfect. But for that 25 days that it could sit in the other account, it was massively holding down your loan, and you adjust the amount you can transfer over each month based off of, what your upcoming bills are. So how much of that is just cushion that's not doing anything. And again, I mean, the power of being able to do that, commission employees are another one. I get this massive commission. I have to live on it for the next 6 months. I only get a commission a couple times a year, 4 times a year. I can't throw it my mortgage. Well, yeah, you can, because you can grab it as easily as you would need it. So that whole entire time until you've used it up or get your next commission, it's holding down your balance. I mean, it's the coolest thing. And people are always like, what? I don't even get it because it's so, but it's.
And what's that process called?
It's just this is called sweep banking.
Okay.
Sweep banking. Yeah. It's how mortgages are done in like Australia and a few other countries. Like that's just always how it's been done. And I mean, it's how, anybody who has a business line of credit, you're used to this.
Right. Yeah.
I mean, your line of credit's there to grab from when you need it. So you grab it just as easily because you have an existing line of credit. This is basically the same thing. You're just, for a person, an individual, backing it up with your house as the collateral.
That makes sense.
Yeah, and the other thing, we won't go into a whole lot of details since Kyle's not here, but the other side of the coin on this, specifically, Adam, I'll mention this for you because I know, Willie, you've heard this probably a couple of different times, but with the infinite banking concept. So when essentially what happens is you can pay premium into a life insurance contract where you can engineer that contract in a way where you build up maximum cash value. Most life insurance policies are engineered for the bulk of the premium to go into the death benefit, and very little go into the cash value. With the infinite banking concept, it sort of reverses that ratio. You put maximum amount of premium dollars into the cash value account of the life insurance policy, and you still maintain an adequate death benefit policy. But ultimately what you're doing it is because it allows you the ability to put yourself in a collateralized position where you can borrow against the contract, in order to have immediate access to capital with no permissions, right? Like you don't have to ask any permission. You can just call either someone like Kyle, or the life insurance company directly, and you can say, I want to take a policy loan, and they send it to you. You deploy it into your business or whatever, and then you set up your own amortized repayment schedule. The magic of the infinite banking concept, one of them anyway, is because you're collateralizing that contract, your money's doing two things at once. It's being deployed to be used for immediate capital, but the money comes from the check you receive from the life insurance company is their money, because your full cash value account never gets depleted.
It's a loan against your policy.
So it's a loan against your policy. So the money that sits in your cash value account continues to compound over time while it sits there, while those same dollars are being used for other reasons. So it's a 2 is 1, 1 is none concept, right?
Definitely.
So anyway, so it's really cool because when you start really getting into the weeds of being able to think about how to strategically implement both the all-in-one loan and the infinite banking contract into your plan, you can really start to see where you can build some significant strategic redundancies. We call it cultivating financial redundancies. So with Treasure State Advisors and the New Frontier in Financial Advocacy, it's one of our four key core principles. Stop losing money unnecessarily and unknowingly, manage your liabilities, borrow smart, and cultivate financial redundancies. So we try to help people do those 4 things, and we feel like by doing that, we can help people live within the system. This is what we talked about on the first show, where this is how you don't necessarily have to remove yourself from the system by bringing a bar of gold into to try to purchase things, right? Because it's very awkward, right? But you can find ways within the system itself to really kind of strategically set yourself up for greater success. And you can build wealth that way without having to just heavily rely on investment returns, which is unfortunately what a lot of people, what we've discussed, does.
Yeah, it's about bringing in more control. So that you're losing less and therefore you're keeping more.
Yeah.
So you can get like for this instance, you don't have to be as reliant on these massive market gains if you didn't lose as much money to begin with, because your mortgage ended up costing you not nearly as much, or your cost of financing ended up, we're financing things all the time. So if you can control that cost of financing, then all of a sudden you're building wealth without needing to run after spectacular gains.
So we are at the end of the 3rd episode. I just wanted to, Karen and I basically have monopolized this conversation. So sorry about that, guys. But
That's all right. No, that's great.
Before we say goodbye, and we're not coming back. This time when we say goodbye, we're going to hang up. So, do you guys have anything pressing that you would like to throw out or ask or talk about before we end the show? I mean, we're happy to talk about anything that you guys, if you have any interest piqued that you want to talk about.
Yeah, I can't really think of anything off the top of my head.
You good, Willie?
Yeah.
Okay.
I mean, it's just interesting. I like listening to you guys. It's one of my weak points. A lot of financial. I didn't really grow up, thinking that way, and it was more of the traditional way that you're kind of just taught, and that's just the way things have been. So it's definitely interesting, and people should be more financial savvy.
Well, we certainly appreciate our relationship with you, as you know. I mean, I just can't state it enough. We love having you a part of this show, and look forward to doing more together in the future.
And green shark gin is delicious.
Yeah. Thank you.
There's perks.
Adam, anything you wanted to depart and final comments or?
I like Willie said, it's fascinating to listen about these pieces that, growing up, it was buy the house, do these things in this order and everything will be fine. And very obviously that's not correct. So it is interesting to hear, new ways about it. And I think you said this in the first episode I was with you, is you don't necessarily have to break the system or leave the system, how to make the system work for you.
Mm-hmm.
And so that just very small tagline has been something that's been in my head since the very first time we talked. And so I appreciate you shining some more light on that for us.
Yep.
Well, and I have to thank you, Adam, for providing the hats too. I mean, that's
a pleasure.
That's awesome. Like, I'm super excited to see, how it goes with people as far as, I think it's a very handsome hat, and I think that people
do some more Vanna.
Yeah, please do. Yeah. So again, just to remind people, if they want to access, if they want to purchase one of the hats, become a free community member, Treasure community member, and while they're there, they can purchase the hat. First 100 members can purchase it at cost. And also, I can never say this enough. Do not forget to go to williesdistillery.com and purchase your products online using the promo code TREASURE. And
Adam, what's your website again?
yeah,
It's doyouhaveapulse.com.
Do you have a pulse?
yeah. Do you have a pulse.com?
Yes, I do.
Yeah.
So far, so good.
Yeah. All right. Well, thank you guys very much. Appreciate doing, that you hung in there to do the 3 episodes with us, and it was a lot of fun, and hope to see you both again.
Yeah.
Love that.
Thanks for hosting us.
Yeah, for sure. All right. Goodbye.
See ya.
Now I gotta run back to Montana. I had my fun